Hi all, just thought I'd go over a couple of CPR zones and kind of like just basically walk through this. I start off on the demand zone, and this was probably a bit more of a complex one, still a CPR zone, but with a couple of nuances. So what you want to see obviously is, for zooming in, is just analyze really the level and what makes this, a strong or an obvious level of support and resistance. And I mean, it's a 2 hour, to be fair, like a 1 hour. If that was, if that was a 1 hour chart, oh, Lord, sorry, 1 second. Let me just get this in place. Right. So if this is a 1 hour chart, why is it doing this? Sorry, guys. So you've got support, support, and you've got a little bit of support there. Now you've got breakout traders getting involved here. Yeah, breakout traders on that 1 hour. And again, where are they placing their stop loss? Where is their entry and their stop loss? It's probably going to be on that that candlestick there. Not many traders are going to put their stop losses, so tight. They're probably going to put it beyond that swing, right? So around that swing there, just above that. Don't know if you guys can see this. For some reason my trackpad is playing up. I don't know why it is, but let me just zoom in a little bit so you can see where, if you're looking at that, that is an obvious breakout, trade. Yeah, traders are definitely going to be looking at this as getting in short, entry at the candle close, etc. Then you get retracement traders get involved on the underside of that level there. And again, if they were getting short, not sure what hourly candle they would be getting in on, but there would be definitely various traders looking to potentially get short, as this may represent something of an entry candle on a lower time frame. So you would have probably had traders putting in their stop losses there and entries around here to varying degrees. And the more you get confirming price action going in a direction, traders would be definitely getting involved here because they FOMO in, right? You don't want to miss out on the momentum move to the downside. So again, once they're in, the next question then becomes, has price gone far enough for them to really kind of make any kind of profit? Now, there's always going to be people that are going to scalp, right? There's always going to be traders taking, 10 pips, 15 pips, 20 pips, and then they're out for the day. But generally, traders want to go for 2, 3 to 1s, etc., thinking that this is the momentum. Yeah. So you get a bunch of traders still probably in there, short positions, etc. Then you get like another mini level, right? Whereas you've got more traders getting involved short here. So you've got more traders assuming that that's going to go to the downside. You've got nice engulfing candle. Traders would look at that and say that's a nice entry candle there. But then we get failures, of these levels to start to continue to the downside. Now, this could be just seen as a deep pullback, right? It could be just seen as a deep pullback, and then prices continue going down. So again, there's probably more traders getting involved. You've got another level here, where you've got support and resistance, support, bit of resistance. The traders probably looking at this as some sort of, Fibonacci retracement. Who knows, from here to here, or deeper retracement. Let's see, Fib retrace. Yes, yeah, so 61.8 starts to work, starts to look like it's working again against this level here. Yeah, so then you've got more traders getting in short. So it's all looking really nice around here. Loads of short trading and people aren't really, I'm not saying that they're not getting long here, but the majority of traders, if you look at the context of what's going on, the trade to the downside, and everybody's taught what? The trend is your friend. The trend is your friend. Pullback. This is just a deeper pullback into a nice level of support and resistance. Hopefully it's going to the downside, right? So when you get that, then what happens is that starts to fail those traders. And again, we know loss aversion bias kicks in. They don't want to accept the loss once prices start to go against them. So they're entering trades here, etc., where their stop losses. Remember that you got these guys here, you got these guys as well who entered down here. You got a bunch of traders just entering at different positions, yeah, placing their stop losses. But now they're all, if they haven't, basically taken profit somewhere. And again, the key to understanding taking profit is really looking at their risk reward, because there's no way that traders are going to be out. If you got short here, yeah, unless you had the superest tightest stop, yeah, and even then you probably would have been stopped out. But price hasn't really gone that far in order for people to take really that much profit for it to be worthwhile. If it starts to go like 2-3 to 1s, then you can probably consider those traders to be out of those trades. But traders who don't trade with stop losses, as we know, traders who move and remove their stop losses because of loss aversion, are now in deep trouble. This is the pain phase. So they've committed on price action all around this area here. Yeah. So what we do have and what we do know is that the more prices go away from this area, right, there would have been these traders here who probably would have been getting short here. If they're smart enough, they've gone through the pain phase, yeah, the relief is going to be here. Well, it's going to add to the supply and demand equation, isn't it? Somewhere around here. And it didn't even really get back down to here. But if you drag that maybe slightly up here, maybe they might have got out for their original loss, which adds, again, if they went short here, then they have to go, they have to do the opposite. They have to buy to exit. They sell to go short, they have to buy to exit, right? So the pain phase, they've seen their unrealized, loss go from, it's rather than 1% risking on a trade or 2%, up here now it's like 10% they could potentially lose. So if the fact that prices have come back down, they want some relief, and they probably got out for their original loss, right? Rather than 10%, it's going to be now, their original 2% or 1% on the loss. But again, those are the smart traders, or the ones that, want to get out. Most traders want to get out break even. A lot of traders down here may not have, decided to get out because they're thinking that prices were going to come back down here. I think they were going to get a lucky escape. So then the pain piles on, yeah, and there's going to be traders that are going to be blowing their accounts, yeah, potentially adding into trades as prices are going up, trying to make money on the way back down, but then eventually blowing their account. Now, this whole area here starts to become a nice area when we think about the supply and demand equation. So if you went short originally thinking that prices were going to go lower, you have to do what to exit? Buy to exit. So that adds to the demand equation. Buying is demand. So if prices come down here, you're going to have these guys looking for relief. It's just to capture pain, and then relief is going to be here. And then you've got obviously new traders who trade support and resistance, getting involved here. And then you've also got traders who went short up here, yeah, where they're looking to take profit at levels of support and resistance because they don't want to be left again holding the bag, right? So that's buying. If you sell here, you have to do what to take profit? You have to buy on your broker. And then we've got us as well, supply and demand traders buying as well. So we've got loads, potentially, from a technical analysis perspective, lots of demand here. Now, who knows whether this is going to work out or not, because we know that fundamentals and sentiment, right, is what rules the market, is what drives prices. Yeah, no matter how much technical analysis you do, if, for example, the US dollar, if the Federal Reserve come out and say something that the market doesn't like, yeah, and it's going to weaken the dollar, you could get prices go straight through. That's just, how it works. But technically, this, is what we do as far as looking at why there should be more demand orders from a technical analysis perspective than supply, and then we try to match that up with the fundamentals and sentiment. And if it goes in our favor, brilliant. We try to go for at least 2 to 1s. Yeah, 2 to 1s, which means that we only have to have a 33% win rate in order to just break even, right? You don't need to have a high win rate, yeah, to make money. If you're winning 40% of the time or anything above that 33%, overall your account should be doing something like this. That's it. Over the long term, you're going to get drawdowns, of course you will, but eventually you're going to get that, right? Because mathematically, it's impossible for you to, win at 38% at a 2-to-1 and not make money over the long term. Now, let's look at the other side of this. Yeah, so it's exactly the same process, but to the downside. And let me just clear this chart now. Right, and then we've got a nice level here, and then we've got. Let's walk through this now. Yeah, so what you've got now is a level and a clear defined level, because that's what the main thing is. We need to understand clearly defined levels. Why? Because traders trade those types of zones. That's an obvious hard in, hard out movement. Yeah, traders are going to be looking to the left, as they're taught repetitively where are levels. Then you've got a bit of a reaction here. You've got a bit of a reaction there as well to the downside. Traders looking like they're getting short, and then you've got a nice reaction here as well. Yeah, it looks like it's reacting. Yeah, nice engulfing candle. Looks like it's going lower. Again, this isn't hindsight bias. You can tell, that this is going to happen, because what do you think traders are going to do at that level when they see the price action? They're going to get in. This isn't a guess. This is just what traders are going to do. If you're not going to get in short here, then you're not going to get in short anywhere at a level of what is known as resistance. And then what happens is, we get what we know is the breakout trader. Now, the breakout trader is expecting what to happen? Prices to go to the upside. So these guys get stopped out first of all. But what I'm more interested in is, from a capture pain relief perspective, is when typical price action fails on these traders. So you've got a level that looked like it was working, then you've got the breakout. Now, traders expecting prices to do what? Go to the upside. Retracement traders expecting what? A bit of a pullback into that zone, and then prices to go to the upside. So what do we get? We get a bit of a pullback as prices come back down, and then what do retracement traders do? Get involved. All right, they get involved at this level here, and then what happens is that it fails. Yeah. So if you zoom in again, you've got pin bar right there. Pin bar right there. So let's just go back a little bit more. Let's go back a little bit more. Again, 99.9% of traders who trade support and resistance are looking at this level, and they're going to get long. Depending on their entry, again, there's many different entries on the lower time frame. If you go down to a 30-minute time frame, that would probably be a nice pin bar, engulfing candle, 15-minute, etc. It all looks different, but the point is that they're in. The price action is what convinces them in. So once they commit, and prices go against them, they're now captured in their position. Why are they captured again? Because of FOMO, because of loss aversion bias. Loss aversion bias means that pain feels worse than gains feel good. Yeah. So they tried to, in the avoidance of trying to avoid a stop loss or stop out, traders will move their stop losses. If it's placed here, then they're going to move and remove their stop losses altogether. Yeah. And then they end up getting caught in their positions. So right now, anyone up here, is caught in their positions. And this is also a nice supply zone. Nice supply zone. And it's the same exact process as we had at the level down here, where everybody was getting short on breakouts, and these guys, and now it's the same exact thing. These traders, this one was a bit more obvious. Now we can see the pain phase. So the capture phase, the pain phase, as they're seeing again. They look like they're blowing up their account, etc., because they're not disciplined, and they're from loss aversion bias. And where's the relief? Back up here. And again, to just explain quickly. So you've got, if you went long here, thinking that prices were going to go higher, what do you have to do to exit? You have to sell to exit. If you bought here, you have to sell to exit, which is supply. You're going to have traders who are trading levels of resistance, potential resistance around here, doing what? Selling within this whole area here. Then you have traders like ourselves who supply and demand traders looking to sell here. If these guys are buying, matter of fact, sorry, not these guys here, we'll explain that, but if these guys are buying, anyone's buying at this area here, yeah. So let's say we've got a level of support there. Support, 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 resistance, support, etc. Right? Let's say, for example, price does do something like this. Yeah. So, and then you've got traders buying on, for example, pin bars here. Yeah, nice little pin bar there, or engulfing candles. The price starts to go in their direction. These guys are going to start to do what? If they bought here, then they have to do what? Take profit here, which is basically selling. Yeah. So sell, buy, and so we've got a whole load of selling, potentially sell orders from a technical analysis perspective around here. Yeah. So we've got capture, pain, relief traders, captured, pain, and then a bit of relief. We've got new traders getting involved here. We've got traders who potentially are buying at these support zones or wherever they're buying from and taking profit somewhere around here. And we've got us. So again, the equation, stands true. So what we're trying to do again is take advantage of the typical support and resistance trading, yeah, which fails those traders, because at the end of the day, trading is a zero-sum game. Yeah, for someone to win, someone else has to lose, and these losing traders, I know exactly what they're going to do if prices do come back and they haven't blown their account already, and all we're doing is taking advantage of this. So if what I'm saying resonates with you, why not check out trading180.com? There is a selection process to trade my supply and demand zone Forex strategy. I'm only looking to work with individuals with the right mindset, who are hard working as well. So check that out. And access really for less than £1 a day. Some of the strategies in here are not for beginners. So if you don't know what supply and demand is, please check out all of my supply and demand videos. I have hundreds of videos on YouTube, so you can check that out first. Guys, take care, and until the next video, have a good one.